Hello friends, today we are looking at Aarti Industries Limited, one of India's major specialty chemicals companies that makes everything from dyes to pharmaceutical intermediates. Let's see what their financial journey tells us. Let's begin with sales. 10 years ago, Aarti Industries was making 2,619 crores in revenue. Fast forward to today, and sales are 7,095 crores. That's almost triple in a decade, working out to about 10% yearly growth. But here is the thing, growth hasn't been smooth. Some years jumped 35% like 2022. Others fell sharply like 3.74% in 2024. Most recently, sales grew 14% this year. So Aarti is quite cyclical, big ups and downs with global chemical cycles. Next, what about expenses? Expenses grew from 2,217 crores to 6,189 crores over the decade. Material costs dominate, usually 40 to 58% of total expenses, which makes sense for a chemical business. Manufacturing costs take up to 15 to 22%. Employee costs stay lean at 3 to 8%, and other costs are around 5 to 8%. But here is the catch. When raw material prices swing like benzene and inline, Aarti's cost can spike unpredictably. Now, operating profit. Operating profit went from 402 crores to 906 crores over 10 years. Operating margins bounce around a lot, from 13% to as high as 28% in good years, currently sitting at 13%. So, for every 100 rupees Aarti makes, about 13 rupees is left after direct cost. Decent, but not always predictable. Let's talk about net profit. Net profit climbed from 163 crores 10 years ago to 237 crores this year. But look at the wild swings. 1,186 crores in 2022, a monster year, then crashing to just 237 crores now. So, while the 10-year compound growth is 5%, recent performance has been tough due to inventory losses and pricing pressure. EPS reflects this volatility, from 4.58 rupees to 6.54 now, but it hit 32.71 rupees in the peak year of 2022. Dividend payouts vary a lot too, 9% to 28% of profits most years, with current yield at 0.26%. Return on equity is just 6% currently, much lower than the 13 to 16% average over 5 years. ROCE is 6.32%, also on the weaker side. Debt to equity is manageable at 0.69. The latest quarter was particularly tough. Sales fell, profits dropped 68% year-on-year to just 43 crores due to steep raw material price corrections and inventory losses. So, overall, Aarti Industries shows what it's like to be in the global chemicals game. When times are good, profits can soar. But when raw materials cost spike or demand drops, margins get squeezed fast. It's definitely a cyclical business, not the steady compounder you would want for predictable returns. If you invest here, be ready for the full roller coaster ride that comes with global commodity cycles. If this breakdown was helpful, subscribe for more honest company stories. And tell me which stock to cover next at Wealth Growth Club.